Morning, everyone. It is June 14th. I am Marcus Bickle with Dennis Nelson, and this is the Naples Money Managers News You Can Use. So today we're going to talk about memes and meme stocks, and we'll finish off with volatility. So we have a couple interesting things to talk about today. I'm sure everyone has heard about the meme stocks in the news, things like GameStop, AMC, BlackBerry, and a whole host of other stocks that just seem to shoot up randomly and fall just as suddenly at times. And you might have heard, there's these groups online, or you might have heard Reddit, things like that. But the heart of it is the word meme, like a meme stock. Well, what is a meme? Meme's an inside joke, essentially. That's kind of the best way to describe it. You take a pre-existing piece of media, a picture, and you repurpose it for your inside joke. What could that picture be? Honestly, it can be anything. I've seen pictures of historical figures. I've seen pictures from comic books. I've seen pictures from TV shows, movies, and then usually the person will repurpose it to kind of fit whatever inside joke or narrative they're trying to push, and that's kind of where this whole meme stock thing came from, because people online have been using those as to communicate as well as an inside joke. So it's something people can rally around, something that's funny, that kind of gives a sense of community. It's honestly not any deeper than that. The amount of organization that a lot of the news seems to ascribe to the meme stocks or the Reddit movement is really kind of overblown. It's a bunch of monkeys in a room. Would be the best way to put it. And there is a direction which these stocks do go up, but they fall just as suddenly. And I just wanted to kind of explain that the memes are really just these inside jokes that don't only just appear in the meme stocks. They're kind of all across the internet these days. If you see a funny picture on Reddit, that's on Reddit or Facebook, that has been edited, that's a meme. That's something that your aunt might have shared with you, or your grandfather. That's a meme. That's just what the kids call it nowadays. Does that make sense?
I don't think so.
Well,
I'm not sure that's really satisfied my thought that this whole thing is kind of crazy, but
it's definitely crazy. I just wanted to say that it's a lot less organized than people seem to think, and memes are literally just funny pictures. It's just a different way to describe it, an inside joke.
So and the joke is on the short sellers.
Well, right now it is, absolutely. Things like AMC and GameStop, the short sellers are posting billions in losses. So we'll see how this shakes out in the end, but it's definitely a weird time.
Well, it's a group of people that have loosely formed together to move the market, apparently with the purpose of getting short sellers in trouble, at least what I've seen, and maybe there's other purposes. I don't know, but it certainly got the attention of the SEC.
Oh yeah, I think there will be some kind of legislation around this, either on the margin side, on the option side, something to limit how this is happening.
The margin discussion is pretty current right now. That's raising the margin on your capability to buy stock by borrowing money.
And it's actually in these cases it's a little bit more complicated than that, and we probably shouldn't get into it too much, but it deals with buying option contracts far out of the money, and essentially being able to control a large portion of stock through these option contracts for a short period of time that forces the stock to go up, and it becomes kind of like a self-fulfilling prophecy. That might not have made a lot of sense to people, but that they're able to use margin to borrow that stock through the contract, essentially, and I think that's how they're going to limit it. I don't think they're going to do anything for the people who legitimately hold like 10 shares of GameStop or 50 shares of AMC. it'll probably be on the borrowing side of it.
Yeah.
But that kind of segues a little bit into volatility, right?
Well, it certainly does. The market for the last couple months, in particular, but probably for most of 2021, has been very low. But for the last couple months, almost historically low volatility in the market, and that's, you know, when you get a market that's not much going on, you get these type of things that happen, that spike a certain stock and get people interested in the market, and there's certainly buyers out there.
Oh yeah, a lot of money on the sidelines.
You know, the old saying, and this is a real old saying, is don't sell a quiet market. Well, this has been a real quiet market, and I'm not selling.
No, absolutely not. And there is a lot of good news out there, but I think you're right. There's nothing super exciting. So maybe that's why people are focusing on these individual.
Probably it does get your interest, I have to admit, and I wouldn't mind owning one of these meme stocks, but I want to own them before they become meme.
It's you know, I've seen a few of these go across, but you never know which one's going to be the right one.
Well,
So.
you don't. You look at GameStop, went from $5 to $250 or something crazy like that.
I think 405 was the top actually.
So there was, to change the subject a little bit, there was a real interesting interview on CNBC this morning with the president of Bank of America. You know, if anybody's got insight as to what's going on in America economically, they've got that insight. And he came across with some kind of interesting numbers. First of all, he said that 1 out of every 2 Americans has some kind of account with Bank of America.
That's enormous.
So talk about getting a wide view of what our economy looks like. They've got it. And one thing he said that caught my interest, you know, I've assumed all along that we're going to be seeing some bankruptcies, maybe quite a few bankruptcies that were generated by the COVID. He says no. He says the bankruptcy rates are running about what would normally they would expect, and they don't see that increasing. So that's great, because that's one thing that's kind of held me back from the banks a little bit.
They might be taking on these huge amounts of bankruptcies.
That's right. You see all these businesses that have gone out of business, and you think, oh, there's a problem waiting to happen. He said that bank deposits, and I'm not sure if this was total bank deposits or just his, but have gone from $1.4 trillion to almost $2 trillion over the last year and a half.
That's a lot of money.
That is a lot of money, and it's a lot of money that's not being lent out. He expects loans to start to pick up. On the negative side, he addressed the supply chain situation that we talked about last week, and expects that to be a longer term problem than most people think, including myself. So we'll wait and see, but it's very interesting to get somebody's perspective who's got that very wide perspective of what's going on in our economy.
Well, thank you, Dennis. Thank you, everyone. Again, this is the Naples Money Managers News You Can Use. And remember, at the end of the day, money matters, but most importantly, you matter. Have a great day.